For years, people have repeated the same sentence. Renting is throwing money away. You hear it from family, friends, and even financial influencers online. The logic sounds simple. When you rent, you're paying someone else's mortgage. But when you buy, your payments go toward owning something. So buying must always be the smarter financial decision, right? Well, not exactly. I'm Ellie, and today we're breaking down why both renting and owning involve money that disappears forever. When people criticize renting, they focus on the fact that rent payments are gone forever. Once the payment leaves your account, that money is never coming back. But homeowners also spend large amounts of money they will never recover. The biggest example is mortgage interest. When you make your monthly mortgage payment, only part of that payment goes toward building equity in your home. A large portion goes directly to the bank as interest. That money is gone forever. Then there are property taxes, insurance payments, and ongoing maintenance costs. Roofs eventually need replacing. Boilers break. Appliances fail. All of these costs disappear in exactly the same way rent does, which leads to an interesting way of thinking about the situation. If you rent, you are paying a landlord, but if you own, you are paying several different landlords: the bank, the government, and the hardware store. Once you understand that, the decision between renting and buying becomes less emotional and more mathematical. And that's where the price-to-rent ratio comes in. The price-to-rent ratio compares how expensive it is to buy a property versus renting a similar one. The formula is simple. You take the price of the property and divide it by the annual rent of a comparable home. For example, imagine a property costs £400,000. A similar property in the same area rents for £1,500 per month. That means the annual rent is £18,000. If we divide £400,000 by £18,000, we get roughly 22. This means the price-to-rent ratio is 22. What that number tells us is that the price of the home is equal to about 22 years of rent. Historically, investors have used some rough guidelines. When the price-to-rent ratio is below 15, buying often makes strong financial sense. When the ratio sits between 15 and 20, the decision becomes more balanced. But when the ratio climbs above 20, renting can sometimes be the more financially efficient option. In many major cities today, price-to-rent ratios have climbed well beyond 20. Cities like London, New York, and Toronto have seen ratios push toward 25, 30, or even higher. In these markets, people are often buying homes less for immediate financial return and more for lifestyle reasons. And that's an important distinction, because buying a home is not purely a financial decision. Ownership offers stability. You control your living space, you can renovate, personalize your home, and you're not exposed to rent increases. For many people, that stability is incredibly valuable, but renting offers flexibility. Renters can move cities more easily, pursue new job opportunities, and avoid tying up large amounts of money in a single asset. Neither option is automatically better. They simply serve different priorities. Buying makes sense when you plan to stay in a property for 7 to 10 years or more, when the price-to-rent ratio in your area is reasonable, and when you have financial stability with emergency savings beyond your deposit. When those pieces come together, buying can be a powerful step toward long-term wealth. But here's the important distinction. Buying for stability can be wise. Buying because of pressure can be expensive. Many people rush into buying simply because they feel like they should. They hear the phrase, renting is throwing money away, so often that they assume renting must always be the wrong decision. But when you look carefully at the numbers, you realize something important. Rent is not the only money you never see again. Interest is also money you never see again. The goal is not ownership. The goal is freedom. Property can absolutely build wealth over time, but it only works when the numbers make sense. Culture tends to shout. Math tends to whisper. And when you're making a financial decision as big as buying a home, it's usually worth listening to the whisper. If this changed how you see property, comment numbers over noise, subscribe for the next episode, and remember, clarity builds wealth, emotion spends it.